I am AI Avatar of Sierra Tan Mundra. Welcome to this detailed overview of the recent modifications and clarifications made under the International Financial Services Centers Authority IFSCA guidelines related to anti-money laundering, AML, counter-terrorist financing CFT, and Know Your Customer KYC regulations. Issued on January 2nd, 2026, this circular brings about essential updates for regulated entities in the International Financial Services Centers IFSCs. These changes aim to further refine compliance measures and ensure robust practices in financial transactions. In today's script, we will walk through the key modifications in the guidelines, explain their implications, and provide clarity on how these adjustments will impact the entities involved.
The first major modification concerns the scope of applicability. The IFSCA has clarified that these guidelines will apply to every regulated entity that is licensed, recognized, registered, or authorized by the authority with a notable exemption clause. The authority holds the discretion to exempt certain activities or entities from these guidelines. This provides flexibility and allows for targeted regulation when necessary. A new definition has been introduced specifically for the KYC Registration Agency (KRA). This refers to an entity that is granted registration under the newly established IFSCA KYC Registration Agency Regulations 2025. This provision ensures that KRA's operations are in line with the updated regulatory framework. To keep up with the digital transformation, the guidelines now recognize not only physical officially valid documents (OVDs) but also their equivalent e-documents. This inclusion supports the increasing shift toward electronic documentation, ensuring seamless compliance in an increasingly digital financial landscape. A significant update has been made concerning the risk categorization of customers. The categorization and its specific reasons must remain confidential and cannot be disclosed to the customer. This move is designed to mitigate the risk of tipping off, which can undermine the effectiveness of anti-money laundering and counter-terrorist financing measures. The guidelines have introduced a stronger emphasis on the transparency of beneficial ownership, particularly in cases where the beneficial owner is an Indian national. Regulated entities are now expected to apply enhanced due diligence measures to ascertain the source of funds, especially in cases involving potential round-tripping. There is now a clear directive on handling KYC applications for persons with disabilities, PWDs. The rejection of KYC applications for PWDs cannot be done without due consideration. The reason for rejection must be duly documented, ensuring a fair and transparent process for this vulnerable group. Regulated entities are now prohibited from restricting any transactions based solely on a suspicious transaction report (STR) unless specified by law. This ensures that businesses do not inadvertently violate customers' rights based on potentially inaccurate or premature reports. The guidelines now allow biometric-based eKYC, including Aadhaar face authentication. This provision aligns with the latest advancements in digital identity verification and ensures that financial institutions stay ahead in managing customer identities securely and efficiently. The circular has outlined specific exemptions for certain entities from the applicability of these guidelines. These include global in-house centers, international branch campuses of foreign universities, and certain financial institutions. However, even these exempted entities are required to conduct a business risk assessment and document their findings. For non-profit organizations, the IFSCA has mandated that they register with the Darpan portal of Niti Aayog if not already done. This step is aimed at improving the tracking and accountability of non-profit entities involved in financial transactions. All financial institutions in the IFSC are required to ensure that all monetary transactions are conducted through an account maintained with a banking unit within the IFSC. This rule guarantees that the financial transactions within the IFSC remain controlled and traceable, supporting the broader goals of anti-money laundering and counter-terrorist financing. In conclusion, the latest circular from the International Financial Services Centers Authority marks an important step toward tightening regulations around anti-money laundering, counter-terrorist financing, and Know Your Customer guidelines. These updates reflect the evolving financial landscape and the need for increased transparency, security, and accountability in global financial transactions. As a regulated entity in the IFSC, it is essential to stay updated on these modifications and ensure full compliance. By doing so, entities will not only meet regulatory expectations but also contribute to the broader global efforts to combat financial crimes. Thank you for tuning in, and we hope this breakdown provides you with a clearer understanding of the new guidelines and their implications for your operations. Moonsys and Management Consultants LP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support and handling compliances, risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BAT, and ancillary regulations. A&D FinTech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.